Welcome traders. In this video we're going to go over the use of the divergence indicator when put on the volumetric bars. In a previous video I had teased a chart that I had seen where I had done this. Doing this ends up with a pretty remarkable win-loss record. So what I have done is a little bit more research to understand why this is such a powerful indicator on the volumetric charts, and this is what I found. The way the ZoneTrader Pro Divergence indicator works is that it is filtering for order size first off. So the settings I'm going to be using on the data series here is just a 5-range chart, and make sure that the tick replay is engaged. And then the only indicator on the chart is the delta divergence. So we want to have a price deviation value of 2.5, one contract for the deviation, 3 key points, and very important to show price plots, show key point data, and up here make sure we're using reconstruct tape and a minimum filter. Now these settings aren't by any means optimized, and if you are going to be doing this, what you should be doing is you should be trying out different values, especially different values for the price deviation value. The other value that I would suggest testing is the data series, is to see if you get better results off of a 3-range chart or a 4-range chart or a 5-range chart. All of these are valid optimization tests that you can run, and probably should be. Okay, so what we have is we have a series of trades here that look very good on the chart, and let me explain why. The ZoneTrader Pro Divergence indicator is a real-time indicator. In other words, you're going to see divergences in real time. And on a tick chart, you're going to see those update when a bar closes. Well, the same thing happens on this 5-range chart. Is you need a bar to close in order to get a signal. So basically what is happening is that the bar itself, after we get the signal, is confirming this, and when the bar closes, that's the time you're going to get this signal. So basically you have a confirmed signal when price is traded down here into this distribution trade, and then you're able to get short and take it even further. Now what is interesting is that sometimes we do get trades where we have to reverse it for no profit, but we end up with more trades that are good for 2, 3, and 4 points than we do trades that we just end up reversing, such as this right here. The other chart that I had previously shown was a bond chart, and because the bonds move not only slowly but not very many ticks, I've reduced this to a 3-range chart to get these results. If you're going to use and look at this on a bond chart, the one change that you need to make is you need to change the price deviation value to 0.0935, and then you can keep all the other settings, or as I suggest, play around and change them up. And again, you get similarly good results with a bond chart that you do on the ES, because once again this bearish divergence trade right here is being confirmed by the 4-tick move down, and then we see trading off the rest of the day. The other thing I wanted to highlight is a couple of trades from Friday the 12th and Thursday the 11th, and I wanted to highlight them because they illustrate just how powerful the new data that you're able to obtain using the divergence indicator actually is. And what we're looking at again is we're looking at ratios down here on the last line, And these ratios are important because they're reflecting the density of the buyers as price fell here. And this 361, which is a pretty extreme number, reflects that for every tick that price fell, the density of the buyers per tick was 361. So there was a lot of absorption going on here. Same way with here, when we made the low of the day, we had a negative 121. And then as price entered a reversal pattern here, the reading was a minus 206, again indicating a very heavy accumulation at the beginning of the lunch hour, which would eventually lead to a 10-point move into the close. Now, the reason I want to highlight the trade is because after receiving this very strong number of a negative 206, we then received a no supply buy signal. Again, what the no supply is telling us is that as price was falling, the large order traders were buying on market orders as that happened. So as you see that price came down and tested that low that was made about 30 minutes earlier, that was the last opportunity for them to get the best prices possible, and they were doing it on market orders. We have a similar read the day before on Thursday the 11th, where when price initially traded after the open, we saw that there was heavy distribution occurring here at this distribution trade. Now, as I've said on previous videos, the only reason that this distribution trade is showing non-divergent is because price equaled the previous high. As price equals the previous high, that's when we get the 132 number, giving us an excellent 3-point trade. But then we trade even higher into the high of the day, and we see that we have a 158 number. So in other words, as price moved directly to 3,006.25, the limit orders on the sell side were even more dense. And then immediately after that, we see that we had a no demand signal, the opposite of the signal I just showed you, where they were selling it on market orders as price rose in order to get better prices. After that, we again saw a nice 10-point sell-off. And that brought us to this distribution trade at the high here. And as we get to the high here, we see that not only do we have a distribution trade, but this time as price traded higher, we see a density ratio of 228. And again, when we see that 228, that led to an over 12-point sell-off. And at the conclusion of the sell-off, we see that we had, again, a very good negative 246 being put in down here, followed by two different buy signals here, along with a no supply at the low of the day. Now, what I have seen is that the initial push down has a very high number, and then on subsequent pushes, the number is somewhat lower as the bottom was being put in here, and the buyers didn't need to be as dense here in order to support the price. And again, once that was done, that led to a 10-point move to the upside. And then we look at this distribution trade right here where price is falling. We have a strong trend trade here, good for 3 points. And again, as I detailed in a previous video, we see these strong trend trades working when there is a good density ratio here. After that, we again see that the sellers provided some density with a ratio of 89 here, leading that into another good 4-point trade. All in all, the divergence trades are probably the easiest of the patterns to trade, And when you use them in conjunction with the density ratio, you can get a little more confidence in that trade that ZoneTrader Pro is going to put you into a successful trade. I hope you enjoyed this video, and if you should have any questions, be sure to give me a call.